Okay, what's going on, everybody? Welcome back to the channel. CMC Broadcasting, back with another trading journal entry. So I never got a chance yesterday to make my video. I was out running some errands and I developed a really bad headache last night. So I decided not to make a video yesterday, but we're going to talk about my trades yesterday. Now, I'll start off by saying this. I am still a little bit upset with myself because I did come out green on the day. All right. And I closed green for the second week in a row. So I do feel like I'm on the right track. But yesterday, I took a fourth trade and I knew I was overtrading. I knew I was going to lose most of my profit. And something, a weakness inside of me, kind of took control in that moment. I ended up entering another trade on PayPal, lost most of my profit, not all of my profit, but lost most of it, and only closed the day like less than 1% up in the account. I was up almost 3%. It was something like 2.7% I was up, and my target has been about 3%, 4%, and it wasn't enough, right? Like PayPal had blessed me with like $25, and it wasn't enough. I wanted more. I needed more. I needed to be right at 3%. I couldn't stop trading until I was up 3%. And so I took a fourth trade and I ended up losing, and I only closed the day up about 1%. Okay, you can see from the, need my display capture. You can see here, right from this screenshot, the account is well over $1,200, but I was only up 0.72%, right? $8.90. So it really goes to show me and to show you, hopefully, that overtrading and the psychology behind your trades and whether or not you can stop yourself from overtrading, that is what's going to make or break you. That's how, if you can master your mind and if you can understand what makes you tick, what makes you get into a trade, then you can become profitable. Because I was aware of that moment, right? There was a part of me that was like, don't get in this trade, right? This is dangerous. You're going to lose your profit. Just walk away with 2.9% or whatever. Just call it a day, right? You're closing the day almost 3% up, right? This has been good. Come on. You could lose money on, like, there was so much inside of me that was telling me this. And when I was in the trade, right, like I almost instantly I knew I shouldn't have taken it, and so there's two aspects of myself. There's this like greedy, or I should say negative greed inside of me that's always battling with the positive greed, right? Because there is positive greed. We're here to make money. We want to make daily gains. If you're not consistently profitable, there's no way you can continue to do this indefinitely. So this is serious for me because this has been several times this week where my greed and my over trading has either, taken my profit away or gotten me into a really bad hole. I think it was like Wednesday. I was in like $100 hole. I managed to climb out of it, right? I made some decisions in the moment and managed to get out of it. But, this is very, very serious. This is extremely serious. And I have huge psychological weaknesses that I really need to meditate on and I really need to sort out. Because, I took 3 trades yesterday. That is my trading plan right there. No more than 3 trades a day. Especially if I'm up. Well, I mean, even if I'm red. If I'm red 3 trades, no. Out. Actually, in my trading plan, it's if I'm red after 2 trades, I'm out. But I was green on the first trade, red on the second trade, green on the third trade. That's my trading plan. I'm supposed to get out, walk away, log my trades and get out. But it's hard, man. It is. It's hard knowing when to stop. So before we get into my trades, let's do the segment where we just talk about where the market ended up closing on Friday. So the S&P is still trying to trying to top its highs from, I think it was February. Yeah, it's February record highs. It's still failed several times now to sort of go any higher than that. So we know that the S&P is at some sort of resistance. But the S&P 500 did finish at about 3,372 points, almost 73 points, 3,373 points. But the NASDAQ was down 0.21% by the end of the day, almost down to 11,000, right? You see 11,019. And the Dow Jones gained 34 points, or 0.12%. And so we've got a lot of money that may be coming out of big tech. I mean, they even talk about this on CNBC. Shares of Amazon and Google are slowly kind of coming down, and we have stocks like United Airlines, Delta, Southwest. We also have Norwegian Cruise Line, right? Some of these cruise ships, and some retail like Nordstrom. Those stocks are making small gains. So the reason I'm talking about this is because watch out for these opportunities and watch out for some of these traps, right? A lot of retail investors are still piling into Amazon and Tesla and Google and Facebook, when it looks like a lot of the big institutional investors or traders are actually taking their profits right now, right? That's why there's so much liquidity too, because somebody's selling it to us. They're taking their profits and going into these stocks that have really been beaten down over the past 6 months, like the airlines, like some of the retail, the cruise lines, right? And once we get some good news about these, about the situation worldwide, once we get some good news and things start opening back up again, if that happens, right? It's a big if, but if and when that happens, these stocks that have been beaten down for the past 6 months, they're going to surge. And, you're going to have all the institutional traders that are already there, and the retail traders are going to be chasing it, right? This is how the industry works for the most part. The institutional traders are really what drives the prices, and the retail investors and traders, they're just sort of, following the leader, I guess you could say. Running around, right, chasing stocks. So be aware of that. There is opportunity coming up. Like if you missed the tech boom, well, okay, that's fine, right? The tech boom could be kind of over for now, right? It's not to say that Amazon won't eventually become a $5,000 stock, or that Facebook couldn't become a $1,000 stock. That's not what I'm saying, long term. But for right now, it looks like those stocks, right? We are in some kind of tech bubble. Institutional traders are taking their profits and going to some of these stocks that, upon good news when it comes to the worldwide situation, they're probably going to, to boom, right? To surge. Could be wrong about that, right? Maybe tech just continues to grow and this is just a little bit of a pullback, but don't be surprised, right? That's basically what I'm trying to say here is do not be surprised if the tech stocks start pulling back. I think we're already kind of seeing that, and try to hop on some of these opportunities, right? I'm thinking about buying some call options on Delta Airlines or Carnival Cruise Lines. I'm thinking about it, guys. Some like long-term call options with expiration dates far out, so I've got a little time to be right on it. So yeah, that's what's going on with the markets. Now, let's talk about my trade. So let me just go to my spreadsheet here real quick. So I traded ExxonMobil, NEO, and PayPal. You can see by my spreadsheet here that the ExxonMobil, it looks like this was a bunch of trades, but this was all one trade. I'm considering this all one trade. I bought 1, 2, 3, 4, 5, 6. I bought 7 contracts. So let's go to ExxonMobil and I'll kind of break this down for you guys. All right. What I did was I sort of scaled into the position, right? And I got in first thing in the morning. Like I think the first entry here was at 9:31. So I had done my pre-market charting, and I charted my supply and demand zones. I knew we were in kind of a demand zone right here. And we were rejecting, or I should say we were being supported at this demand zone right here. Okay, you can see this long green, sort of bluish shaded area right here, right? This area right here that I'm sort of clicking on and off at. We were being supported, and you can tell we were being supported because of the bottoming tail on this green candle, right? So we're looking at this on the 5-minute chart, but if we go to look at the 1-minute chart, yes, trading at the open is a little bit of a gamble, but look at this, right? This green candle right here. Look at that huge volume coming in, right? This is the 930 candle. Huge volume coming in. Huge bottoming tail, meaning that, the sellers tried to take this all the way down, but the bulls brought it back up, right? Because the candle opened here. Sellers tried to take it down here to the low of 42.41, and that is pretty low for ExxonMobil. Like, I knew that was a low for ExxonMobil, at least for that day. And the bulls, the buyers, stepped up and managed to close the candle up here. So that's when I was like, all right, I got to get in this, right? So I got in on this candle, starting at this candle. And remember, I got in at, 931, 931, 937, 939. So I sort of scaled into this position for about, we'll call it like 20 minutes, right? So for 20 minutes, remember, we're on the 1-minute chart here. For 20 minutes, and remember, I know there's resistance, or should I say supply up here at about the 43.28 area. And you can see, right, it got rejected. It never made it, higher than that. And that's the great thing about trading like one particular stock over and over again. You sort of get to learn its personality and, what it does on a consistent basis. But let's just zoom in here. So I started getting in after I saw this candle with heavy green volume, huge bottoming tail. I knew this was going to go up to something, right? So I sort of scaled into this position, right? And I knew it was going to hold this line right here because we had sort of a demand zone that I had mapped out. You see all these little dotted, you can't even call them candlesticks, just where the price closed or opened and closed in pre-market right at the same area, and it did it. So we kind of had some sort of demand zone here, right? That's what I was predicting it was. So over the next 20 minutes or so, I kind of scaled into this position. I think the last purchase I made was at 948, right? So that would have been like right here, right? Because I could see the stock was consolidating a little bit after this first rip up, kind of consolidated a little bit, and I was betting the stock was going to go up, and it did. And let's see where I got out. 951 to about 956. So I had, by this green candle right here at the 948 candle, I had 7 contracts that I'm holding, call options, right? And I think they were 4350. Yeah, 4350 calls. And so I got out between 951 right here, started taking profits, and 956. Now, if my strategy wasn't, so this red candle, I think, is when I sold my very last contract. Probably sold it up at the top of this red candle because why? We had this doji candle, right, which is not a very bullish sign, and we also have topping tails. You can see a topping tail on this green candle, a topping tail on this red candle, right? It was a pretty good sign that we were going to get a pullback. I probably sold my last contract right here at about 42.97. Now, I could have held longer, right? I'm thinking about trying to stretch out my strategy a little bit because I missed out. Let's see, how much did I really miss out at? Well, yeah, I did miss out on a little bit of profit, right? It went a little bit higher, so I could have held on to it a few more minutes, maybe another half an hour, but I pretty much rode this up, right? I got in down here, Well, my first position was even down here, and I got out at between about 9:51, right, and 9:56. So around this area. Could have rode it up a little bit more. Maybe I should have, right? But it is what it is. My strategy is scalping, and I could have held it all day, and it would have never really reversed on me. I would have. I would have been green on my contracts the whole time and rode it all the way to the close. I could have done that. I'm thinking about maybe, doing that a little bit more. Maybe not on TD Ameritrade, but maybe trying that kind of strategy on WeBull, right? Have another account where I'm doing longer day trades. But altogether on ExxonMobil, you can see my profit over here: $1.70, $2.70, $3.70, $4.70, $2.70, $4.70, and then 70 cents. And that's including the commission. So altogether, let's call it 5, 10, 15. Let's call it about $20, right? $20. Could have made more on it. I should have bought more contracts. And I think Monday what I'm going to do is start doubling down a little bit more, start buying contracts 2 at a time. Right, like if I have a good, if there's a good chart here and it's really holding a demand zone and I think it's going to go up, I might start buying the contracts 2 at a time, kind of scaling. This week I like that I did practice scaling into the position, right? Not buying everything at once and not selling everything at once, but sort of scaling into the position and getting out as the stock, locking in profits and, sort of getting as much as I possibly can get out of it. And in hindsight, right, like, yeah, I should have bought here and held all the way to the close in hindsight. But this, we're not hindsight trading here. You have to make these decisions in the moment. There's nothing that was saying this stock couldn't go down to $41. It could have, right? So I'm scalping. I'm sort of getting in and out of these positions, but I made about $20 on it. Now let's go to the NEO. NEO was, I didn't lose that much money on it because I did cut my losses fairly soon, and they were, I only bought like 2 contracts, but I lost, let's see, about $3. So we'll call it like $5, $6, including the commissions that I lost on NEO. So let me show you what happened with NEO, okay? I got into the position. I bought $13 calls at 9:58, and then I was out by 10:03. So that was a very quick trade. I think actually though I was right about the market, which is really frustrating because if I, yeah. So 9:58, where is that? Okay, so I got in right here, right? I got in right here. 9:58. This green candle right here. I got in right here, and by 10:03, this red candle right here, I had sold it, right? And I bought calls, and I thought I was on the wrong side of the market. I wasn't, right? I was actually right about this. It's just my entry was bad. I should have waited for this to sort of, pull back a little bit, wait till I got a bottoming tail like this on a red candle. This is where I should have entered. And then I could have rode this, up here, right? Could have entered back in here. I'm learning as I go, guys. I'm going to be getting better at this, but I bought right here thinking that this was more bullish than it really was, and it was going to go up here and it was going to be a quick scalp. It pulled back on me, and I ended up selling for the $5 loss. It was 2 contracts that I bought, right? If we go to my spreadsheet here on NEO, 2 contracts. One was $51. The other one was $49, and I got out at $49 and $48. And it does suck because I was right? The stock went up, right? We're talking about right in here is where I got in. Right, I got out right here, and look how much the stock, look where it went. I could have made some good money on this, especially if I had scaled into my position. I think what I should have done is just kept watching it and probably just gotten back in, kind of caught that, right, and then I could have caught this. That's how I kind of want to play these, is try to. Because the other thing about NEO and ExxonMobil and, Blink charging is that the contracts, they're only like $50, $60, $80. So, with a $1,200 account that I have, $1,245, I can buy several contracts, and I can buy 5 of them and kind of scale in and out of the position. I can do it again. Like I could have played this all day long and probably made way over $100. Or I could have just bought a bunch of contracts here in hindsight and sold them up at the top here. But we were trading in between the supply and demand zones, which is good, right? That's part of my trading plan. We had a big demand zone here. Let me go to the 5-minute chart. We had a sell-off in the morning, right? That would have been a great scalp to catch as well. You could see it was kind of getting rejected at the supply zone here, and boom, you could have gotten in on this red candle at the 9:30 opening and rode it all the way down to the bottom. That would have been great. Then you had this bottoming tail on this red candle showing you that it was being supported at demand. It was really being supported at demand, and that just simply means that at this blue shaded area, there are tons of buy orders from big institutional investors. That's why the stock is being held up. And, this would have been great. I should have watched this one a lot more that day. And I think that's what I'm going to do. I'm going to show you on my last trade on PayPal, right? PayPal, you can make a lot of money on PayPal. But again, these contracts, right? $257 I spent on one contract. Granted, I sold it for $270. So that's like what, almost a $15 profit right there on one contract. But you can see the difference, right? $257 for a PayPal put, as opposed to like a $49 call on NEO or a $48 call on ExxonMobil. For my account size, I should not be trading PayPal, right? I just don't have enough money. And if I'm wrong on the PayPal, right, which I'm going to show you what happened, it really eats into my profits quickly. So with PayPal, right, let's go to the 1-minute chart. PayPal kind of plummeted in the beginning and then was just kind of flat all day long. And so this was my third trade. Was let's see, I actually bought 2 contracts, one for $257, the other one for $265, and I sold both of those, one of those for $270 and the other one for $273. So I made a profit on both of those. That was at 10:06 and I was out by 10:12. So that was about a 6-minute trade. So 10:06 was right in here, right? Let's see. 10:06. So yeah, I got in here at 10:06, and by 10:12, could have held it a little bit longer. Should have held it a little bit longer. Yeah. So this red candle, probably bought at the top of this red candle, sold around the bottom of this red candle, right? So that area right there. Got in a little bit too late and sold a little bit too early. Well, I still made a good profit on that, right? Like I said. That was probably about $25 or so. Maybe more than that, maybe like 30. And then I was like, well, I'm going to do it again. So I bought another PayPal put, right? Those were 190 puts. I bought a 187 put because it was a little bit less expensive. I got it for $217, and I ended up selling that for $194, taking a pretty big loss for that day. So that was, let me just see what the time at 11:13, and then wait a minute, I got something mixed up here. 11:13, 11:09. I must have mixed that up. It must be like 11:09, 11:13. But anyways, to make a long story short, I got caught in this chop, right? I bought puts at the bottom where I should have bought, because I thought we're way in between the supply and demand zone, which was kind of a bad idea to trade this, right? I got to go to the 10-day chart. No, I even got to go to the, let's see, the 20-day chart to see. So the nearest demand zone that I have mapped out is way down here at $178, okay? And so we're way in between supply and demand. I shouldn't have even really traded this, to be honest with you. But especially the fourth trade, which was at the bottom, and I got caught in this chop here. It looks a little bit more choppy on the 1-minute chart too. I bought puts thinking it was going to go down even more because I've seen PayPal go down $20, right? I've seen that happen. And I was on the wrong side of the market. I bought puts, and I did get out, right? I got out pretty quickly, right? I probably got in here, and, you know, I probably got out around here. So, I mean, I got out quickly, but still with a stock like PayPal, because those contracts are so much, right? If you're right about it, you can make a, you know, big amount of money, right? Even on one or two contracts, but it costs so much because they're like $217. But if you're wrong about it, you know, even if you get out in a timely manner, you're still taking $15 loss. Sorry, my nose itches. You're still going to take a $15 loss, a $20 loss. And so what I need to focus on next week is trading the Neos, the Blinks, the Exxon Mobils. My account isn't big enough yet where I can really start trading the PayPals and stuff, because the other thing is too is like with Exxon Mobil, you know, let's say I'm not too sure about it. It's at a demand zone. It seems to be being supported at the demand zone. I can buy one contract and that's $50, right? It's like 1%, you know, a little over, like it's like 3% of my account or something, right? I can buy, I can scale into it and it doesn't, I'll still have $700 left, right? Like I could scale in to, sorry, my nose itches. It's this light. I could scale into my position, right? Buy 4, 5, 6 contracts and still have like $800 left to trade with that day, right? But with PayPal or Square or some of these other bigger stocks, if I buy 1 or 2 contracts, that's like $700 right there. And if I'm wrong, well, I'm taking a huge loss. I'm taking a $50 loss, a $100 loss. So what I'm going to focus on is the smaller stocks next week. You know, I will get to a day where I will be able to trade these bigger stocks. But for now, what I need to do is focus on the big movement on these smaller stocks, scale in and out of the positions like I did on ExxonMobil. I am glad that I cut my losses soon, right? I didn't hang on to losing trades on Friday. I got out of that Neo trade, even though I was right about the Neo trade. When I saw that it was going against me, I did the right thing and got out. Same thing with the last PayPal trade. But what I did wrong was I overtraded. I had a chance to walk away with like, you know, a gain of about 2.9% in the account. I think it was like 2.7%. I'd made like $33 or something cash, all mine, you know, $33, including the commissions, right? So that was what I was going to walk away with. And, you know, that fourth trade took $20 away from me, $25 away from me, and I walked away with like less than $9 that day. Still in the green, right? Closed the week green. Learned a lot about myself over the last week, and you know, really, I've got some things I'm going to focus on, right? The overtrading, the smaller stocks that I'm going to trade, the smaller contracts. You know, really focusing on that movement first thing in the morning. And you know, being much more aware of the, you know, when I start feeling greedy, I just need to close the computer and walk away. I can log all the trades later, right? And that's what happens to me too. Some people are going to relate to this. You'll start logging in your trades for the day, but you still got your trading your app open, you still got the software open, and you're still watching the market, and you're thinking like, oh, the market's moving without me. That fear of missing out, right? That's the other thing that I haven't really talked about much, but that's something I've really been struggling with, right? I'm still struggling with it because I'm thinking to myself, you know, about yesterday's trade, you know, even though it's only like, you know, it's only like $25, right? Like, why am I sweating this? But it's the principle of it, because this is serious. If I don't get this in order, if I don't master my own psychological weakness, I'm not going to be able to be profitable. So this is very, very serious for me. And I've got a lot that I need to work on. But all in all, closed the week out green. Second week in a row, closed Friday out green, as small as it was, less than 1%. You know, I'll take it. I took a little bit of a loss on Robinhood, on a put option that I had for Blink. I had held it overnight. I shouldn't have done that. That was a really stupid idea. But I'll talk about that in another video. I'll do a Robinhood portfolio video eventually. So yeah, let me know what you guys think in the comments section down below. What stocks are you going to be watching this upcoming week? Please be sure to give the video a big fat like. Comment down below. As always, this is CMC Broadcasting. I'll see you next time. God bless.